All right, everybody. Stocks by the numbers. Welcome back. Wanted to do a quick overall view on On Holding AG, ticker symbol ONON, listed here on the New York Stock Exchange. Stock closed 49 and a quarter, down about 63 cents, 1.25% on the day, up a handful of cents after hours right now. And this company is based out of, well, they're headquartered out of Switzerland, and they make apparel, footwear. And I did a little research, and I believe they have a warehouse on the West Coast, they were saying, and I know they mentioned potentially expanding out on the East Coast. I believe Atlanta, they said, was the location they picked. The board said that it's not like on-site ready yet, so they still have obviously maybe some equipment and stuff they have to bring in. So that's going to be, I don't know, maybe like 6, 12 months down the road. And also, before I go any further, I believe it's manufactured, most of their manufacturing is actually done overseas in Vietnam. And the numbers of the company itself have been growing nicely, in my opinion. But the fact that it's going to be imported from Vietnam mostly, I just have a feeling that Trump is going to go kind of balls to the wall when he gets in. And I think that tariffs are probably going up across the board, which of course may potentially impact this company's future profits. And also here, this is from their website. You can see we're committed to ensuring fair and inclusive working conditions. Yes, yes, yes. The right to a living wage is integral to our business values, and we're developing strategies with our suppliers for wage transparency and fair competitive compensation initiatives. We're going to have living wage clause to all of our tier 1 manufacturing facilities by 2025. So how much of a pay increase these workers are going to receive, honestly, I'm not sure. And also the exchange rate between dollars, Swiss francs, and my apologies, I don't know what Vietnam uses, but you understand the fact that that is also a potential variable that can tie into this equation. So moving into 2025, we may still see a company that is growing its footprint, is growing its market share, and is consistently increasing their revenue being brought in quarter over quarter, and possibly predominantly beating estimates along the way. But in my opinion, I think that with potential increase in tariffs and now a potential increase in um, what do you call it? Payroll, I think that that may start to eat into their profits moving forward. However, even over the last couple of quarters when the company had some EPS misses, it seems like the revenue is more heavily weighted for this company than the EPS. So, you kind of had to have a double-edged sword there. But in my opinion, I mean, I would say again, the company is growing nicely. I would just honestly expect a potential pullback on the announcement of some beefed up tariffs. But ONON came out, this is what, September 21. We had a little run up, we had a big drop down. Stock ran all the way up to about 56 and then dropped down to 15 and has since been on the up and up, mostly having a big run up here throughout 2023. You can see the little bit of a dip here. That's when we sold off kind of this time last year. It was August, September, October. I believe the market sold off. So you can see August, September, October, and then we start to climb up coming into these earnings. And the last couple of quarters, again, we have a beat on the EPS and the revenue, and then you have a big miss on the EPS and a slight miss on the revenue, and then they bounce back with a beat on the top and bottom line. And last quarter, again, they missed EPS by almost 10%, but the revenue did come in above that 600 plus milestone that they were looking to break above, and they brought in over 631 million. So the revenue, as I said, has been growing nicely. Market cap right now 15.77 billion, trading over 90 times earnings. And we can see, just looking at the last couple of quarters, we have 2 beats, 2 misses on the EPS side. Next Q3 coming out looking like the middle of November, next earnings report. EPS estimates 23 cents a share. That time last year, the company beat on estimates of 16 cents. They posted 22 cents. So technically 1 cent higher on the EPS side than what they reported this time last year. And, they might be able to do it. But again, moving forward into 2025 and 2026 under this new administration, we may run into a little bit of a roadblock. And if you look at a lot of other apparel and footwear companies, just like we used to speak about Under Armour, right? I said, in my opinion, Under Armour a while back, it may be undervalued in the numbers. The chart looked like we had a potential gap fill, and I thought by now the stock would be moving, right? But we're seeing a lot of hesitation, if you will, behind a lot of these footwear and apparel companies. Nike, Under Armour, I know Foot Locker recently took a hit, but even off the top of my head, something like Hanes Brands, HBI that I used to watch, these stocks aren't seeing a lot of momentum. And in my opinion, I think that even any positivity coming here from any of these apparel companies, this is why I'm saying I think they may potentially start to soften a little bit in the numbers if new and beefed up tariffs get rolled out in the next, year or two. But technically growing nicely. If we look at the annual revenue here, you can see a couple of $100 million back in 2019, up to almost $500 million, almost $800 million, and then $1.28 billion, and then just about $2 billion to close out 2023, with, of course, the net margin now turning positive, and the company holding about 4.5% net margin percentage over the last 2 years. And if we look quarterly as well, we can see that for the most part, we're on the up and up. And the last quarter, as I mentioned, they broke the 600 million milestone. They brought in 627 million in revenue. And that time the year before was slightly sub 500 million. So the company, the revenue is chunking up nicely. I do have to call it like I see it. And of course, the net margin percentage as of last quarter down to 5.4%, but seems pretty healthy so far for the first half of 2024. But now, again, 627 million they just brought in. And roughly 2 months from today, when they're going to report next quarter's earnings, you can see the estimates are almost 729 million, indicating significant revenue growth, not only quarter over quarter, but year over year as well. So you're talking about 100 million growth on 600 million quarter over quarter. And again, this is Q3. Last Q3, the company brought in 543.85 million. Now estimates are 728.7 million. So granted, if they happen to even come close or surpass this revenue estimate, chances are the stock's going to pop. But in my opinion, I have a feeling that we may run and retest back up. This is a 1-year chart, by the way. We may run up and retest this top fib 5484, which is very close to the previous all-time high of 5587. And also, I drew out for you, it looks like we're kind of in this upward channel, as you see, over the last couple of quarters. We're just kind of stepping upward inside of this kind of sideways ladder. Slanted ladder, not sideways. But you can see that it could potentially meet up with kind of those previous highs, the top fib level, the top trend line, and then you can have a drop down. Also, when we look at stock charts, I'll show you in a second, in my opinion, also the RSI is potentially topping out at around that 70 benchmark on both the daily and the weekly. So on multiple time frames, we could be due for a pullback. So a potential retest to the 20-day moving average here again, as you see, about the mid-40s, which would be like a 10 to 15% sell-off from this level. So do I like it overall? In my opinion, yes. Because as we say, men lie, women lie, numbers don't lie. So according to the numbers, the company is growing nicely. But again, the fact that they're headquartered in Switzerland, it's being manufactured overseas in Vietnam, and then it's being shipped in here. Apparently, most of their revenue is coming from here, domestically in the States. And that also was surprising to me because it doesn't seem like they're generating a lot of revenue from Switzerland, which is interesting to me. But let's get into some of the numbers here. So first of all, as we see, the cash is growing significantly well. We're talking about close to 100 million quarter over quarter here. We jumped up about looking like 75 million in change from Q1 to Q2. The company now holding over $700 million in cash, which is phenomenal. You can see the free cash flow, 88.6 million. This time last year was negative 9 million. So everything seems to be growing nicely. The debt, though, from the same period, not necessarily a big deal, but the debt here, you can see this time last year, 195 million. Now, as of last quarter, 405 million. So the debt is up roughly 100%, but also at the same time, basically so is the cash on hand, which is outweighing the increase in debt. So not necessarily a red flag in my opinion. We have short and long-term assets outweighing liabilities. Let's look here. Looks like the cost of goods sold is scaling pretty well with the increase in revenue. Gross profit for the most part consistently increasing up to 376 million. Operating expenses, yep, going up. Operating income, not necessarily stagnating, but you can see it was holding like the mid 40s more times than not. Then we had the pop up above 60. As of last quarter, they posted 52.4 million in operating income, which technically is the second highest it's been going back like the last 7 or 8 quarters. So this is why I'm saying a lot of the numbers are moving in the right directions. And if hypothetically that negative prediction doesn't come true and they don't run into a big roadblock with the tariffs or anything like that, then based on previous trends, the company should continue to grow nicely. But again, I just have my concerns when it comes to these apparel companies, because again, I have a feeling that we're going to see a shift kind of away from these foreign imports, and we're going to start to see a focus back on American manufacturing and American made products. So that's why something like a lot of these, sneaker and apparel companies that make their products, whether it's in South America or in Asia, I just think, in my opinion, those are the ones that are going to start to see their profits get chipped away moving forward. But again, technically, it's not an issue until it actually happens, like we say, right? So in the moment, this company does look pretty good. And the assets have been slowly climbing. Along with the liabilities. Total assets minus total liabilities yields total equity. We can see the total equity slowly climbing. We were above $1 billion here at the tail end of 22. Now we're approaching 1.4 billion. And again, the debt climbing, but not necessarily a big issue. One of the issues I'm seeing here is that while the equity is climbing nicely, which increases the book value per share, as you see, going from 330 up to above 4, as of last quarter, 428. The only problem with that is stock right now is sitting at, $49. So we're trading like 12 times book value, which, looking at how the stock has performed over the last several quarters, could be viewed as a little bit of a high ratio, which is why I'm saying in the short term, you may have a pullback, 10, 15%, kind of quote unquote, bring it back down to reality before they try to bounce it back up to that 50 plus mark. But that's just my opinion. If we look at the stats here, we can see the PE, again, PE sitting here around 90. And for the most part, it has been up. 80, 90, was over 100 at points. So they are keeping it trading at a higher multiple. Price to sales right now is a touch over 6.5. And you can see, going back before that, we had some moments of this range. But before and after, for the most part, looks like it was sitting between like 4.5 and 5.5. So that's why that ratio could start to pull back, obviously, if the stock sells off. Price to cash flow sitting here at 33. That's actually average for the last couple of quarters. Price to book here, as you see, a little over 10.5. And all the quarters before this, we were in the single digits. So again, should it completely drop down, 20, 30%? Probably not. But if it does pull back, 10, 12%, that'll bring the price to book down to, 9 and change, kind of where it was, and then they can potentially bounce it from there. So if we're talking about, initially getting involved right now in the company, in my opinion, I'd look for I'd look for a day. I'd wait for a couple of bucks maybe to shave off the share price before I started to build a position. But that's just me. Enterprise value right now, 14.5 billion. Current market cap, 15.7 billion. Again, the enterprise value is what another company would be willing to pay for the business. So technically, the company is overvalued according to how other companies would pay them out. But we know that's just one piece of information. That's not, the main metric to go off of. Our return percentages have been climbing nicely because all the numbers for the most part across the board are increasing. Gross margin was at 58%, got up to the high 59s, broke above 60, had a slight pullback, and then had a slight increase as of last quarter, 59.94%. So technically not the highest it's been, but slowly up and slightly up from where we were that time last year, 59.5%, gross margin now approaching 60%. Something like the operating margin, as you see, was 887 this time last year. As of last quarter, 835. So, we technically have a couple of tiny negatives mixed in here, but overall, it's part of a larger growing company. So that's why the stock really isn't taking these huge hits after earnings. Or if it does, it usually bounces and climbs and rebounds right back to where it was just within a week or so. The EBITDA growing pretty nicely, maintaining, as you see last quarter, about 13%. And it's been here in kind of the low to mid-teens for the last 6 quarters in a row, it looks like. So that seems pretty solid. The net margin percentage went from 0.75% this time last year. Now it's up to over 5%. Obviously, last quarter was close to 18%, but we know we have these hot and not quarters. And also, this is an apparel footwear company, and if they're reporting earnings in roughly 2 months, but it's going to be the business done during the, summer months where people are more active, then perhaps that's also why they're looking for another jump up in revenue to that milestone north of 700 million. So the company potentially has a very good chance to actually meet and beat that revenue number. But again, we'll have to wait and see. Again, earnings coming out mid-November next quarter for this company. Inventory turnover just kind of hanging out in the high ones where it's been for the most part. Asset turnover, again, how much revenue the company's generating off of said assets on its balance sheet. And you can see that we had a slight dip here, but for the most part, we're on the up and up. Our debt percentages are up a chunk here, going back the last 7 or 8 quarters, as you see. But again, technically, the company does have a decent amount of cash on hand, and it is consistently growing, so not necessarily a big red flag there. We have 3 misses on the EPS over the last 7 quarters. If we look annually, we only have 1 beat over the last 3 years. Revenue, though, revenue has been growing steadily and beating more times than not. And we have 6 beats over the last 7 quarters. And when they did miss Q4 of last year, they missed by only about 1.5%. And you can see estimates for next quarter over 700 million, and then we're going to have a slight dip to 681 million, and then they're expecting to go back on the up and up, 761 million for Q1 of 25, and Q2 of 25, 841 million. So we are still expecting further and further growth and higher sales moving forward. So again, not to bet against the front runner, but again, in my opinion, I would potentially right now be betting against the company in my eyes. And again, moving forward into 25, if those tariffs do come in, I think we may potentially run into an issue. But annually on the revenue side, you can see the company beat 2 of the last 3 years, and for 2023 missed by about 1/3%. So very, very slight miss. But moving forward, we're still forecasting further growth here. We're expecting to close out 24 at 2.67 billion, 25 up to 3.38 billion, 26 breaks 4.2 billion, and 27 breaks 5.3 billion. So we're still growing, anywhere from 600-700 million to $1 billion plus year over year in revenue growth. We're forecasting over the next 3 or 4 years. So obviously, if the company is able to deliver, and as I laid out, there's no tariffs or any issues that impact the profitability side of the business too much, then chances are, you can turn around in, 3 years or so, and we can be looking at $100+ stock. So I definitely see the growth here. But I did want to show you, obviously they're doing something well. Because even if we look at the shoes segment, you can see we basically had a double up from 2019 to 2020, and then about a 50+% move from 20 to 21, and then another 50+% move from 21 to 22, and then another 50+% move from 22 to 23. So the shoes seem to be the bread and butter right here. And you can see that of about 2 billion in revenue, 1.9 billion came from shoes for 2023. So as long as the shoes stay hot, and and people continue to go to the website and make the order, then obviously it's going to grow well. But in all fairness, other segments like the apparel and the accessories segment are growing nicely. It's just not as much revenue, right? But the apparel, as you see in 21, was at a sub 40 million. Now it's almost 80 million. The accessories was 5.4 million in 21, was over 13 million in 23. So they're moving along. They're churning along. But also, again, this raised a red flag. Well, not necessarily a red flag, but, you know, it's just something I'm thinking about, a potential issue. 1.2 billion came from the United States. And it's just unfortunate because we see these companies do this time and time again. And, you know, they're based out of, like, you know, some European country, and the actual manufacturing's being done overseas in South America or Asia. And then it's just getting pushed into the US. And, you know, because everyone feels Americans have the most discretionary income, you know, we just get charged top dollar for everything across the board. And that's where everyone generates the bulk of their revenue, is from the United States. Now, granted, you can see other segments of the business here, other demographics, Europe, Middle East, Africa, growing nicely. 284 million up to 317, up to almost half a billion in 2023. But also the fact that, as you see, Switzerland only about 50 million change, and technically dropped from about 54 million down to 51 million from 22 to 23. And that's why something like this, I don't know, it just kind of throws me for a loop a little bit, because I'm not necessarily saying that, you know, Switzerland should have 2-3 billion in sales. That's not what I'm saying at all. But you would also think that if it was a company headquartered in Switzerland and the products were that good and they're supposedly shipping them out to athletes for, you know, the Paris Olympics and whatnot, then you would think that the locals in Switzerland would appreciate those products as well. But, you know, maybe that's just me. Maybe I'm just reading too much into it. But let's look at the fair value of the business before I let you go. As we say, I like to look at the equity, 1.37 billion. We have about 400 million in debt. So if we subtract that, we're looking at about 1 billion. But we come back here, cash on hand, 700 billion, right? So now you're up to 1.7 billion. Now we come and look at the actual revenue generation. It's about 2 billion. So now you're at what, like 3.7 billion. Little bit of income, we'll call it 3.75 billion, is quote unquote fair value for the business. And that would bring us to currently trading about 4 times fair value with a 90 PE. So again, not necessarily overvalued in my opinion, but as I laid out earlier, if it starts to pull back 10-15%, in my eyes, it would make sense. In my eyes, it would make sense. So you could potentially see a pullback to about 3, maybe 3.5 times, quote unquote, fair value, which would bring the market cap down to, I want to say, maybe like 12 billion, 13 billion, which would actually be about a 20% sell-off, which would bring us to about 40 bucks. So about $40 a share, in my opinion, would be where I personally would consider buying the stock. And we mentioned a potential pullback now after running up to the 20-day moving average, looking like about 44. But the stock could also come back to this fib here at 42 and potentially form that double bottom and then spike up again, right? Because technically the stock is in this upward channel and it is making higher highs and higher lows. So as of right now, the stock is bullish. So that's why I'm saying if we have a slight pullback here with this overextension and the high RSI, and then it bounces and goes right back up to 50 plus, in my opinion, it would make sense. But, you know, technically it could start to come down a little bit. But let's look at stock charts real quick. I'll let you go. And we can see the RSI recently topped out, and we had a down day today of roughly 1.25%, topping out at 50.28. No, I'm sorry, 50.28. Our top Bollinger Band stock hit 50.12, and then started to pull back here, closing at 49.25. But again, even if this RSI starts to pull back to kind of mid-road here, 50, something right here, the mid-Bollinger Band retest of about 46, in my opinion, makes sense. And I was looking for potentially a pullback to about 40, maybe 41, And our 50-day moving average is 42.08. Bottom Bollinger Band 41.81. So we have to see now if it does pull back to the 20-day. You have to see, does it have a healthy bounce off the 20-day and keep going, or does it break the 20-day and now it's going to start approaching that 42 fib level? You have the 50-day here slightly above 42, and then you have the bottom Bollinger Band slightly below 42. But technically the stock just crossed to the upside here on the MACD. We had that nice pop up. It's been on the up and up, but again, technically in the numbers a little overbought, so we might be due for a sell-off. RSI on the weekly, and you can see last time it basically hit that benchmark, that's when it started to pull back, but it technically is stepping up and up with the stock. But RSI right now sitting at 69.5, so we may open, up 1% again to try to reclaim that and jump back up to like 49.75, 50 a share, and then reject at that psychological level with the RSI hitting that 70 plus, and you might start to see a pullback in the stock. And the mid Bollinger Band on the weekly, 41.22. So this is why, again, I feel, in my opinion, we have a potential pullback to the 20-day at about 44, and then a potential retest of the 50-day, the bottom fib level, and the mid Bollinger Band on the weekly, the bottom Bollinger Band on the daily of, the low 41s to the low 42s, right? So that's why, in my opinion, I'm expecting a pullback to those levels, but then I'd potentially consider stepping in. Because as we know with a lot of earnings, even if a company doesn't beat earnings, I mentioned the earnings strategy that a lot of people play, and that's that, you wait like maybe a week or two before the company posts earnings, and then that's when you step in and you buy. Because a lot of times the stock runs up on anticipation going into earnings, right? And then if you want to lock in most of the profits and liquidate most of the position before earnings are reported, you can secure those profits, maybe leave a couple of runners if you like. And then if the company, again, beats earnings, boom, you make more on the calls you're holding. If the company misses earnings and those calls are a wash, it's not a big deal because the bulk of the position ran up and you secured profits before the announcement was made. So I remember reading that many, many years ago, and people were saying, if you do like most of the earnings plays and you ride the momentum and sell before earnings, you had like, whatever it was. I'm pulling a number out of my ass right now, but it was something, it was like 72%, 78% success rate or something, and then, they had like similar positions and they held them through earnings after the company reported numbers. And you had like a 51% success rate or something like that, right? Because we know even if we are technically on the right side and the company reports good numbers, sometimes the stock goes down, even if it's a good earnings report. So this is why, again, I used to speak about the earnings momentum play of getting in, riding the anticipation going into earnings, let the stock run up a little bit, secure the profits, and then no matter what the company reports, it doesn't matter because you rode the wave and the hype going into the earnings and secured your profits, right? But that's pretty much it. Let's check the pivot points real quick. I'll let you go. Technically just got above top line resistance of 47.36. Let's see what these old lines were. Looking like about 49.25, which is right where the stock stopped. Next resistance level was up here, like 54.33 or something, which obviously would be new highs. But again, we have the top trend line here of looking like about 53, 54 and change. And we have our top 1-year fib level, 54.84. So that's why, again, another leg up to some previous higher resistance level could potentially make sense. But it looks like we're going to be staying in this channel. So that's why we can have maybe a small run up here at the open of 50 plus, but then we might start to see a rejection and come back down to the mid-low 40s. Let's look at the daily. And we can see next resistance level, let me take this off. Next resistance level 51.62. And immediate top line level is about 52.33. But again, the RSI potentially a little overextended on the daily and the weekly. So that's why I'm saying in my eyes, we might start to pull back kind of where it was before we had the pop, as opposed to just running up to the next level. But we know that sometimes the RSI doesn't matter, and every stock has its moments where it stays above that benchmark or below that benchmark and takes its time rebounding up or selling off down. But we had a nice healthy bounce, it looks like, off of this pivot point, 43.43, and we've been on the up and up. But again, it looks like it's maybe starting to tighten and slow down, which is why we might be ready to pull back here, maybe to like 46, 45. That's what I'm potentially looking for. But that's pretty much it. On again. Headquartered out of Switzerland, seems to be growing very nicely. Apparently people in the States like the products and keep ordering them. So as of right now, it does seem to be growing nicely. I would personally look for a discounted price. And also, I would keep my ear to the ground and listen out for any potential tariffs moving forward after elections. But that's it. So I'm going to end it there. Once again, Stocks by the Numbers. I want to thank you for stopping by. If you have any questions, comments, or concerns, drop it down in the comments section. I'm usually very quick to reply. Thumbs up algorithm helps me get more eyes on the channel. And of course, subscribe to the channel. That is our handshake agreement. That is how you help me help you. But more importantly, moving forward, like I always say, I understand that markets are rocky, they're volatile, they are very uncertain. So I want to wish all of you success. I hope everyone makes a couple of dollars. Thank you for your time. Have a good day.